Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here for Monday Market Moves, what happened last week in the markets, and what I expect for next week. Alrighty, next week we have Doomberg coming on the show, so be sure to submit your questions for him. And for the newbies, the FNGs, which of course stands for the Fun New Guys, we go to the home page and then click right here on Posts. This used to be called Community tab, now it's called Posts, and submit your question for Doomberg in the comments below. So right down here, we already got 3 comments and 6 thumbs up. So put your questions in for him there. We also have several interviews coming up from the VRIC. We got Ross Beaty, Warren Irwin, and Fabi Lara of the next big rush. So be sure to stay tuned and hit that little notification bell so you don't miss an episode. Alrighty, let's go to the charts. Starting out as always with the S&P 500. So this one's kind of exciting, sending a bit of mixed signals. So I've got a bull flag drawn right here, which you can see, which is generally a bullish a bullish sign that it should be going up. But one thing I can't help but notice is that we've got this right here. So it's kind of a pretty predictable pattern right here. Okay, so this week the market went up and then gapped down on Monday, and then went up, fell Friday, gapped down on Monday, and then went up and fell on Friday. So if the pattern repeats itself, each time it was a lower high and a lower low. If we get third time as a charm, then this should gap down and on Monday be lower than it was today, and then go up, and then on Friday come back down. So we'll see if that happens. That's my bias. That's my bias more than the bull flag. We'll see. It would be pretty interesting if it did exactly that. So it's down 0.25% for the week. We'll see what happens. All right, the Mag 7, I just want to click through these so you guys can see the long-term charts on this and just kind of get an idea where we're at. Okay, so NVIDIA off of its highs here, looks like kind of a topping pattern. Apple off of its highs here, looks like it's being caught by the 200 moving average. Microsoft kind of grinding out a base right here, but whenever I see it, with just the more times it touches like this, it looks like it's getting weaker and weaker. So I would expect Microsoft to start breaking down. Amazon off of its highs right there, just massively gapped down. Google, same kind of thing, massive gaps down. It's got the 200 moving average there to catch it, but it fell right through the 50. Meta's an exception here. It's making all-time highs. And Tesla, same kind of thing, just keeps putting in lower lows. So we'll see how that goes. All of these companies here, these technology companies, essentially, even Tesla, they're going to have to start coming up with their own power plants. I think that like Elon did with his own gas power plant, natural gas power plant. I think all of them are going to have to start doing that, and their data centers are using too much energy. They're not able to just tie into the regular grid. They got to start essentially becoming their own power company. So that's going to be a big expense on these, and one thing that I think could drive them down. Not to mention DeepSeek. We'll see how far that actually goes. Alrighty, the DXY is down 0.4% for the week. So the dollar down 0.4 in relation to the other 6 currencies that it is compared against. Now, this is only 5 days worth of action. So that was Monday and then through Friday. I drew a little tiny bear flag there. Now, I'll bring this out to the hourly. So each one of these bars represents an hour. And so we had this massive gap up, and then right here, and see how it kind of looks like a hockey stick, but going to the downside. I could see this playing out going lower next week, which is my bias. And the 10-year yield is down 1.1% for the week. So this one I think is kind of interesting. Let me get this out of the way so you can see it. Okay, so I think it's going to 5%, and we can do a couple of different retracements here. So one of them is a fib retracement, and we basically just go from the bottom to the top. And look at that, it's hit it almost perfectly on the 61.8% retracement. Now, if we run the Fibonacci extension and we run from this last low to the high and then back down to where it retraced, and we check and see where the upside of that, it hits almost perfectly on 5%, which lines up with some previous resistance right back here of October 2023. So that's my bias. I think the yield is going up to 5%. I think it'll probably reverse this week or the next, possibly creating another little double bottom here on the 61.8 and then on its way back up. And the 10-year yield minus the 2-year yield changed about 40% as compared to last week. So in other words, 10-year yield is paying 0.2% more than a 2-year yield, which, if you think about that, is kind of crazy, but it is. And we also have, it looks like a bit of a retracement right here as well. So that looks kind of interesting. Let me see if we're almost at the 61.8 or have not quite hit it. No, we're at the 50% retracement. So we might get a little bounce there, but it's more likely, I think, that it'll continue down and probably hit around the 61.8 next week. And your cash is paying 4.3%, same as last week, the week before, and the week before that. This is the LQD. This is the one that David Skrika was talking about in our episode with him, and how to put a massive hedge on your portfolio in case there is a stock market crash. So this is basically to protect you from moments like this, like we had in COVID right there, and also like we had in the great financial crisis right back here, right? So if you put a put on this dated out about a year, it'll probably do nothing and expire worthless unless you get moments like this, and then it will go up 10 or 20x depending on how smart you are and when you sell it. That is also coming at a time when, if you have a moment like this, that means no matter what you got in your portfolio, well, I shouldn't say that, but almost no matter what you have in your portfolio is going into the tank. Meanwhile, this is just driving up. So this, you know, make it half of 1% of your portfolio because it's probably going to expire worthless. But just in case it doesn't, you get a massive return here, and then you have a nice bit of cash to where you can put that to work. Because if a moment like this happens, you know, your Exxon shares that are $100 right now are going to go to 35, and you'll be able to pile into those when they get really cheap and catch it on the way back up. Alrighty, and gold hit another new all-time high last week, got all the way up to $2,910, and just looking absolutely fantastic. Now, let me caveat this here. I would not be buying any gold stocks here. Let's get that out of the way. I might even be taking a little bit of profits here in our gold miners, because we all know we've been in these for a while, and they're finally looking really, really good. You know, I'm not saying to sell any physical gold. That's not what I'm talking about at all. I'm not even going to entertain selling any physical until I start seeing our big thinkers and politicians say, hey, look at what we did. We balanced the budget. Can you imagine that? That's not going to happen for a while. You know, we're probably not going to see that happen until gold hits something like 10,000. So we're a long ways away from there. But it's really easy to click a button and sell a stretched gold stock. All right, gold divided by the S&P 500, we're almost at that 50% mark. Closed the week at 0.479, so getting very close, although I do see we got this trend line right here that's pretty well established, hit 1, 2, 3, 4 times, hitting on a fifth. I would expect the S&P to outperform gold next week, although I hope I'm wrong. And CEF, physical gold and silver on the stock market that you can buy with a click of a mouse, is up 2.2% for the week. No buys now. Possible double top right here. Probably going to retrace next week. PHYS, physical gold, same thing. Getting pretty stretched right here. Been in this a long time. You know, I'm not selling any, but if you want to take some profits, certainly wouldn't shake a stick at that. And GDX up 4.9% for the week. So same kind of thing. I know a lot of you guys got in down here around 34, 35 bucks. You've had a nice little run here in short order. Inside of like 5 weeks, I think you've made about 20%. Yep. Nice little run there. GDXJ, same kind of thing. A lot of you guys got in down here around, 42, 43 bucks. You're up, same thing, like 20, 21%. Good thing is we're back up above this trend line right here in this channel. So we've bounced up above that, but super stretched technicals on all these gold stocks. Franco Nevada is up 3.9% for the week. So had to move this white line up here. I think our new resistance is going to be around 145, which is a couple bucks above it. How did we find out about this company here? So I will tell you, we found out about it from the Rule Classroom. So we saw when Panama shut down their Cobre Panama asset. Then I asked the two guys that I knew would know better than me if this was like for reals or not. And that was Adrian Day and Rick Rule. So yes, boys and girls, the Rule Classroom. If you haven't joined yet, it's my favorite price. It's absolutely free. You can get it as an app on your phone. You can listen to it on the way to work. You can get all the boot camps, everything in there. And for more serious investors, there's the Rule Classroom Plus. So you can try this one out for free for 2 months. And after that, if you love it, which you will, it is $39 per month. So Adrian Day just put on an options class, which made me realize I need to be doing a bunch of covered calls. So like, you know, you only need 100 shares of a company to do a covered call and get one contract, right? I should be running covered calls on Franco Nevada. I don't really have any plans on selling this thing for a while, not until it gets overpriced, which it's not now. You know, I should be collecting rent on these things while I'm doing it. Anyways, we also did a lifestyles company. That was an interesting class. That was a lot of fun. And another one, Albert and I basically pulled up the charts like I have now, and we took live listener questions and say, what companies should we look up? We looked up Africa Oil. We looked up all sorts of companies, whatever the listeners wanted to see, and we pulled it up. So I would love to see you over in the Rule Classroom or the Rule Classroom Plus. Links are in the pinned comment below. All righty, and Wheaton Precious Metals is up 6% for the week. So getting pretty stretched. Nothing moves in a straight line except for Wheaton Precious Metals last week. Look at that. Getting close to all-time highs, though. So it looks like all-time highs are 68, 69 bucks. $68.63. Love this software. So that is the immediate resistance to the upside. I think a lot of these gold equities are probably going to have a correction next week, but I hope I'm wrong. And Gold Royalty Corporation. So we have a massive move here in a lot of these gold stocks. You know, no news here on Gold Royalty Corporation. I thought maybe Marin Katusa might have advertised for him again. I didn't see anything on that, but getting pretty stretched in the technicals here. 72 on the RSI. I don't know what, I mean, Peter and I had an interview that came out last week with this company, but I don't think this would move it 12% or whatever it is. I don't know what it is. Maybe there's some like foreign buying or something, but you'll see as we click through here, a lot of these stocks are just kind of had real massive moves there. So I don't know if some funds were buying in or what happened. Origin Royalties is up 0.2% for the week. Looks like we might be forming like a bull flag right here. Bias for next week would be down a little bit here. We got the 50 moving average to catch it and the 200 moving average. And the bull flag would make sense. We've got about another, I don't know, month and a half or so, and then we'll get all the details on the Altius arbitration and the deal and everything, which I think this is basically going to re-rate probably overnight as soon as that happens. Maybe not quite overnight, small market cap company, so it may take a little while for all the news to disseminate, but it should be a pretty quick re-rating. And Barrick Gold up 4% for the week. So earnings are coming out on Wednesday. We'll see what those are, but pretty high technicals, so it wouldn't surprise me if we have a little, little correction here. And the next upside here is going to be, or next resistance is going to be the 200 moving average, which is just shy of $18. Newmont is up 5% for the week. So, you know, you guys' limit orders hit down here for 37 bucks, something like that. You're up, I don't know, 20%. Yeah, up about 20% in short order. You know, traders, your RSI is 71. When you bought it, it was 22. It did exactly what you thought it would do. You know, Maybe sell 10%. You got to pay yourself at some point, right? Agnico Eagle, same kind of thing. A lot of you guys got in here on this yellow line. Had a nice little run up here. I mean, it's getting past these all-time highs. I need to move this white line up. I don't know what's the next one. We'll just say $100 just because it's a round number. I mean, we're right there, right? Getting super stretched. Chris says, I would never sell Agnico in this market. Just buy more if it has a dip. Okay, we'll see. That's a pretty bullish statement there. B2 Gold. Okay, so this one's pretty exciting, up 4.6%. I don't own any straight up shares in this, but I just bought a couple of long dated options. One expires in January of 2026 and the next one in January 2027 with the 250 strike price. We just moved up above the strike price for both of them, so that's awesome. Equinox Gold. Now this one had a heck of a move, up 9.2% for the week. Interviewed Rylan at the VRIC. That interview came out last week. So super bullish on Equinox over the next year or so. We'll see if they can actually get some of their costs down. They've had a lot of high costs. So we'll see if how Los Filos works out. I actually contemplated taking some profits in this one last week just because, you know, it had, I mean, look at the move that it had there on Monday. Just a massive move up, 8%. So pretty far in the black on this one, because usually what I do in these high conviction bets like this, you know, ones like G Mining, ones with Newmont, ones like Equinox here, is as the share price goes down, I buy more. So I think this was 20% of my bet, this was 30, and this was like 50. So you get in the black pretty quick when it goes up, and I might take a little profits. I think what I'm going to do is I'm going to use this upper channel trend line right here. So if this hits, which is around $7, I'll probably take some profits on Equinox. G Mining Ventures. So sold a few shares in this a couple weeks ago. That was a poor decision because it just continued to run up all the way up at $11 now. I think this $6 little line that we've had in here forever is now an official pipe dream. I don't know that I should move it all the way up to $9. Though there is quite a bit of resistance right around there, or I'm sorry, support. I would feel a little more comfortable moving the best buy line right down to here where there's a little bit more price action. That's right around $8. And then I think I'll put the yellow line here around like $9.25 or so. Okay, and Rio 2, super exciting, up 16.5%. Construction is in the works and going. This little 39-cent limit order is an absolute pipe dream. Kind of exciting here. Is that a cup and handle? No, not really. I don't think so because we got that little bump right there. See, now this was a cup and handle. Like, see how it started right here? Let me draw this. Okay, so we got a cup, come down, handle, and boom, off to the races, right? Continuation pattern. So it's continuing in the uptrend, boom, cup and handle, bam. Maybe we could justify this as a cup and handle if we started up here. I really don't like that V right where the line is right now and then coming up. So we'll see if this kind of recovers down. If it does, I'll treat it like a cup and handle like I did back here, which allowed me to get that entry point. And then I will put in another bet, and I'll basically move up my 38 cents to something more realistic that's probably going to hit. All right, and silver is up 0.6% for the week, so looking fantastic. As far as basically what we need to do, see, we got this rising 200-day moving average right here, which is fantastic. It's up above $30 right now. So after talking with Michael Oliver last week, these best buy lines down here of $26.50, $28, probably not very likely that they're going to hit. Before talking with him, I was thinking, we might see a 25% chance that $26.50 will get hit. I'm kind of thinking that's probably closer to like maybe 5 or 10% that this actually gets hit down here. So probably not very likely. I think it's extremely likely that 32 will get touched. And I don't know, $30, maybe we got a 50-50 chance of that getting hit. But these are, at least the 2650 is not quite a pipe dream, but it's probably getting close to that. And the gold to silver ratio, gold outperformed by 1.3% last week. So this trend line right here, it is now up above it, and gold just continues to outperform silver. Would love to see this chart just absolutely slam down, and then all of our silver stocks would do amazing. PSLV, physical silver on the stock market. I don't see any buys right now, but this is pretty exciting. So what's going on right now with the paper market and everything in gold and silver? It looks like London's getting drained, and people are just starting to pile into this stuff. So it's getting pretty exciting. This one's up 2.7% for the week. Same kind of thing as silver. We just want to see it stay above this 200-day moving average, and everything is butterflies and ice cream. SIL up 4.3% for the week. So I thought there might have been like a bear flag right here. Let me just draw it so you guys can see it. So I thought this might have been a bear flag. That proved to not be correct because it just shot right up past that. So that didn't mean a thing. But this stock is absolutely killing it. No buys yet. See, RSI is pretty high, starting to roll over a little bit. But our buy points are going to be down here by these yellow and green lines. SILJ up 4.5% for the week. So this would be another one that would be a candidate for, covered calls here. Is like I've got lots of shares of this thing that I'm basically just waiting on silver to go to $50. And, in the meantime, I could just collect rent on them. No buys right here. We got some immediate resistance up around $12 at the 200-day moving average. Pan American Silver up 5.8% for the week. So last time we were here with Pan American Silver, back here, it was in October of 2024. I actually had a sell order in for $24 for Pan American Silver, and now we're, fast forward 4 or 5 months later, and we're at the same point, and still similar points on the RSI. Debating taking a little. I mean, we've had almost a double here since my last entry, around $13. I think I'm going to hold out for 28. I really do. I like this company a lot. I think it will do really well in a silver bull run, and I think we're getting very close. I think we're getting really, really close. But anyways, I was debating taking some profits last week, and because I haven't taken any profits. I've only bought this thing. I've never taken any profits, but I think I'm going to stick to 28. But don't be surprised to see a down arrow there next week. All right, Endeavor Silver down 0.8% for the week. So the one silver stock we have here that did not go up. I don't own this one, but I know you guys like it, so I bring it up every week. So this trend line right here seems to be pretty accurate. If you're just buying on this white line, that seems to work. That put it around a limit order of like $3.50, something like that. Best buy would be $3, although that probably won't hit unless silver gets down to 28 or so. And this was the one that I found at the Metals Investors Forum in Vancouver. Interviewed the guys. It's up 35%. So this seems to be tracking really well with silver and seems to be a very, very leveraged bet on it. Volume increasing, and it looks like the 200 moving average is just going to start turning around. So copper, paging Dr. Copper, up 7.2% for the week. So just had a massive move here on copper, looking fantastic, up to $4, and we'll round up to 59 cents. So awesome. We want to be buying copper on weakness. This is not weakness here. I would expect some kind of pullback pretty soon, though. Our next level of resistance is going to be just north of that, $4.67. And then right after that, it's going to be $4 and we'll call it 79 cents, this previous high right here. So we might have a little bit more upside in copper, but I would not expect much. It's at RSI's at 73. So I'd expect some kind of pullback, and then that'll give you, another entry point. Gold divided by copper. Copper outperformed by the tune of 5%. So it now takes 629 pounds of copper to get 1 ounce of gold. And COP.U, the Sprott Physical Copper Trust, is now trading at a 15.1% discount. I think this might be a little skewed though, because remember, we've had a nice run up here in copper. And so I would be looking to enter the COP.U as we get closer to this white trend line in the commodity itself. And hopefully the discount will continue to give you time to do so. This one went up 1.7% for the week. So copper shot up. This only went up a tiny bit. COPX up 7.8% for the week. So just buying here down whenever it hits this $38 line. I think that's a nice little entry point down there. I think that this line right down here, 36.25, is a nice little stink bid, but very likely to turn down next week, and it's because of this reversal bar right there. And COPJ, same kind of thing, like buys right here at 17.75, and then again at 17. Well, I have a limit order at 17.35, and then a stink bid in down here at 16.55. But we want to see this correct back down, which it probably will, and then we can find an entry point there. And Freeport is up 6.6% for the week. So I think, you know, your guys' limit orders hit back here at 36 bucks. Next limit order is going to be down here at 33, which has a lot of back support. Monduro Capital up 2.3% for the week. Nothing new here, just waiting on BHP to hit a good drill hole. Adrian and I talked about this a little bit in the Rural Classroom Plus. And uranium down 2.5% for the week. So super excited about this one. This one is just getting stupid cheap, and I'm going to share my screen here and we can take a look. Check this out. So thank you, Cameco. Someone put this out on Twitter and I retweeted it so you can see the link there. But basically, at the end of the month, what UXC and TradeTech do is they publish the long-term contract prices. And what the long-term contract price is it's the cheapest one, the least costly one that is done. So some of these contracts might be at, you know, 90 bucks, 100 bucks. I mean, we saw some for 125, I think. And but the cheapest one was $81. So the long-term contract right here is $81 and the spot price is $69. Okay, so let me zoom in on this so you can see this just a little bit better. But basically, this black line here is the long-term pricing, and this blue line here is the spot price. Now, just like when it went up here and spiked, and we got the spot price to go up to 106 or whatever it was, and we were selling uranium, now that's actually reversed. Because see, it was up here, well, this is reporting 100, so that was the cheapest spot price. And then down here, the long-term was 72. That's the time to sell. Now look at what's happened. The alligator jaws have gone the other way, and now the long-term price is 81 and the spot price is 69. So this is going to reverse, and these are those moments where you can take advantage of it. And you know, I mean, I know there's some serious gold bugs here, okay? But gold has had an amazing run here over the last few months. Remember, we started piling into this thing when we had that triple bottom at 16.15, and now we're screaming and we're almost touching 3,000, okay? Uranium is down in the dumps. This is when we're selling uranium, and this is where we start buying even more aggressively, right? We could take some of our profits that we had in gold and we can put them in to this one right here, which is beaten down to a pulp. And when you go on to the social media, especially Twitter, I mean, that is just a perfect, you know, sentiment indicator. Everyone is rocket ships, you know, gold and silver and all this stuff, right? And nobody likes uranium. There's no rocket ships on uranium. Probably a pretty good indicator. Okay, so I asked last week, like, why do you guys think that uranium got hit? And I got a bunch of feedback. Barbara says, I think it was all to do with DeepSeek. And Jed says, uranium and miners went down on Monday because of the DeepSeek freakout. If we don't need all the AI infrastructure, then we also don't need all the energy to power them. Ann says, DeepSeek needs less energy. Okay, so has anyone tried this DeepSeek? I use ChatGPT fairly regularly. I actually have a paid subscription that I can use for the show to do the descriptions and stuff, and my editor uses them all the time. But I'm not, I've never used DeepSeek. I don't know what it's like. Anyone who has, please give me some feedback and let everyone else know. And how does it compare to ChatGPT? All right, so this is Lobo's take on uranium, and this is from his free weekly newsletter. He says, I'm very bullish on uranium. The headwind that seems to have hit spot prices because the Chinese came out with a cheaper AI is hype and going into reverse. AI was never my basis for speculating on uranium, so this latest kerfuffle doesn't affect my stance at all. It does, however, create some great opportunities. I'm looking to buy more. You and me both, Lobo, so you can check out his free newsletter. For me, it is a must read every week. There is a link in the pinned comment below, and I would highly also recommend, I'll also put down in the show notes his link to his copper article, which I think is absolutely prudent right now. All right, gold divided by uranium. Gold is just massively outperforming uranium, so it takes 41 pounds of uranium right now to buy 1 ounce of gold. And SRUUF, look at this, just absolutely getting slammed down and just gobbling up some cheap pounds of uranium right now. Now remember, they're not storing this stuff for free, but I think we're going to have a pretty good reversal here, and these will look like just absolute cheapskate orders when the time comes. And Cameco is up 1% for the week, so don't really see any buys here. Maybe a limit order around 47, stink bid around 41. URNM, so this is the one I'm kind of excited about. Now, RSI isn't fantastic. It's 44, but we have this upward channel trend line right now, and when you look at where the gold equities are, they're up at this end of the chart, and uranium's down at this end. I really think, taking some of those massive profits that you've had in some of these gold miners, once the recession hits, I don't think the gold miners are going to do all that well for those few months that we're in a deep part of the recession. I think even gold itself is going to get hit. So, we're up quite a bit on those things. URNJ, same kind of thing. Okay, so I'm thinking about getting some more of this. As far as like the idiot proof ones, we got 1850 and then 1750 as far as limit orders, but I think anywhere around now is fine. And Uranium Royalty Corporation is up 4.2% for the week. It's up above the 200-day moving average, so that's a little encouraging. We got increasing volume. Hopefully this catches a bid and runs up. But, as far as limit orders, I like $2.15 and then stink bid at $1.90. And Uranium Energy Corporation. So 2 weeks ago, we were saying that, this looks like a pretty good time to take some profits, but that was on Friday. You guys are watching this on Sunday. And so if you're hoping to, sell it for around $8, that was a pipe dream, because on Monday it just completely gapped down and you were in $6 before you knew it. But it looks like, if you really like this company, this one's extremely volatile. I'm pretty biased on this because I got in really, really cheap on one of Rick's boot camps and then just rode it all the way to the point of no concern. And so now I have this one for free. But if you want to get more around this 200-day moving average, looks like a decent entry point. Not great on the RSI, not great on the MACD, but it seems like a fairly reliable point right here that's hit 4 times, and that might be an entry point for you. Alrighty, and crude oil is, down 2.1% for WTI. Brent is down 0.3%. I expect oil to keep on dropping here a little bit. That gap got filled. And same for WTI. I think this is probably going to come down and settle out in the high 60s. And gold divided by WTI takes 40 barrels of oil to buy 1 ounce of gold. And XLE, our favorite oil ETF, this one's kind of interesting. So we've got some retracements here on oil stocks. So let me run a fib retracement again, and there we go. So hit perfectly right on the 61.8. So if you guys want to get that, what you're going to want to look for is a bar like that. So hopefully this comes down for like a double bottom right onto the 61.8. That would be around $87. And I think that might be an interesting entry point. Not fantastic on the RSI, kind of middle of the road. Best buys would be down here at $83. And ExxonMobil Looking great, like a limit order down here at 105. Almost hit it right there on Monday. Not quite though, almost got there, got down to 105.32. But I like that one as an entry point, and then a stink bid around 101. And Chevron looking good here as well. Okay, came back down. That also looks like a retracement now that I'm looking at it. Is it? Yeah, pretty much. Hit right there on the 61.8. Fell down slightly below that, but then bounced right up. And it's just settled around the 200-day moving average right now. That one is up 2.3% for the week. And Canadian Natural Resources up 0.1% for the week. So this one's kind of interesting. Had a massive sell-off there on Monday and then shot right back up. So as far as limit orders, if you guys want into some heavy sour crude up in Canada, $29.75 I like as a limit order, and then $26.50. And Blackstone Minerals is up 2% for the week. So this is interesting. Thank you, Joe, for pointing this out. They picked up a copper gold project out in the Philippines. So, you know, it's still in, you know, infancy stages. I mean, it looks like they're just doing exploration right now. But I did think it was kind of interesting that that they're picking up some of those assets instead of just oil. Bit of a retracement here on this one as well. We'll see if this comes in for a double bottom. But that might be an interesting entry point, but I still like 14 bucks as your bid. And freehold royalties. So down here, when it got down on this double bottom right down here, your dividend is 8.8%, and this thing pays 9 cents per share per month as their dividend. Pretty incredible. And natural gas is up 8.7% for the week. So this one also had a retracement. So we had this long, well, not super long term, but since like October of last year, it just obeyed this trend line, just going up, finally rolled over and broke down. And, but we just hit a retracement here right on the 61.8. So I would like to see a double bottom come in, and then that might be a nice entry point for natural gas, which is right around $3. And Mr. Trance says, take profits on natural gas for now. We're going to slide into oblivion. Okay, sir, put your thoughts down below. Why do you think that? I would love to know. Devon Energy. Okay, another retracement here, hitting right around the 61.8. Not perfect, so I wouldn't play to that. But, you know, it is worth noting. Another one that AMP brought up is there's a gap rate here. I think it goes around like, I don't know, 32.75, 32.80, somewhere in there. So there is a bit of a gap rate here that I think will probably get filled. So Devon's probably moving down just a little bit more next week. Devon was down 2.8%, and Woodside is up 0.7%. I might be cutting my losses on this one, and with the dividends, I think I'm down like 20%, something like that. I might be cutting my losses on this one and just moving it into maybe either Birchcliff or Pado or Devon. Yeah, I think Australian natural gas, I think Canadian and North American natural gas is probably going to do a lot better than Australian, but maybe I'm wrong. And Birchcliff is up 2.5% for the week, so pretty cool there. Now, what was really interesting about this one is they cut their dividend. I asked everyone about that, got 3 responses, so thank you, Wizard, Steve, and Luce. Basically, they've been paying their dividends via debt, which is probably never a good idea. But it looks like they're going to be focusing more on paying back their debt. I like that. So I'm happy to take less of a dividend for that. Oh, and Luce says, hope you and Gloria are doing great. We are. Thank you, Luce. It was great to meet you out there. All right. And Pado up 2.3% for the week. So last week I said that I thought this one would come down, that it was extremely likely that it would. Andrew says, thank you, Steve. Monday market moves is incredibly helpful and efficient. Happy to have picked up Pado near your second limited order this morning. Have a great day. You as well, sir, and thank you. So how did I know that this was going to come down? Well, I didn't know, but we're playing probabilities here. So I see everything just like I got the deck of cards in the background. I love poker, I love odds, I love math, and I love percentages. And I see all of these as just percentages, right? I'm playing probabilities here. And when I see a reversal bar on Friday that looks like that, the stock price is going down. I put it at 80%, but now that we can see the future, we know it was 100, right? But when you get a reversal bar like that, it is almost always going to go down to the downside. Now, there are exceptions here, like this one right here. That same kind of thing, not quite as bad, but you know, this one I would put is probably 75% on the downside, even though it's a bearish engulfing. I would put this one at 75. This one's like 80, 85, because it's even lower than this one. Like it just completely just washed out. So anyways, love this software. It allows you to cherry pick these bottoms like this, and it's TradingView. So check it out. There is a link in the pinned comment below. Now it's free. You don't even have to pay for this software. You don't get all these cool indicators that I have on here. But you know, if you're going to start out using this thing, that's the place to do it, and it doesn't cost you a dime. Alrighty, now one thing about this company that I've noticed is we often just have these really long wicks of selling like this, and so that's why I have these limit orders like just so insanely low down here, is because you might get lucky. So like Andrew, one of you others, it looks like someone had exactly a limit order. When you look at the low right here, you can tell that someone got it for 10 bucks a share, right? Well, hopefully next time it does that, someone will get it for $9.75, and that'll be me. I really should have a limit order in down here for like 825, because when we look back over history, see, like maybe I would have got lucky right here and gotten this one at 825 if I had that limit order in. But you know, there's quite a bit of back support, you know, just north of $8. And I think that I should probably just put in another limit order for that. As a matter of fact, I will make a note. Order 825. All right, there we go. Okay, and coal. Thermal coal is down 9.2% for the week. So coming to the lower end right here where Matt thought that the bottom was for thermal coal at 110. And met coal towards the lower end of the range. He thinks the floor is around 180 and the ceiling around 220 right now. It's at 188. That one is down 0.5%. And our favorite coal ETF, the only one that exists, thank you to the guys over at Range, is down 1.3% for the week. Got $10.5 million of assets under management and 530,000 shares. Next limit order I have is down here at 18 bucks. Glencore up 2.7% for the week. Rumors going around that Glencore and Rio Tinto may merge, so that would be very interesting, and I think Glencore would probably make out pretty well if that happened. I think now is a fine time to buy, and then a stink bid down here around 8 bucks. And AMR down 2.2% for the week. So I have just been absolutely smoked on this bet right here. I mean, my first bid was $350 and we're sitting at $179 now. So even with this order right here, I think I'm still down 30% on this one. So just absolutely getting crushed on this bet. So hopefully met coal turns around soon and AMR should do really well. And BTU down 12.2% for the week. So they had bad earnings call. Little dividend came out. I was a success 6 out of 6 times on trading this thing, and this is the 7th one, and this option is going to expire worthless. I mean, unless, you know, something happens and you know, it's touched and just springs to the upside, but I don't think this option is going to be worth anything. So the next support lines that I see that have any real significance are at 1425 and then 1075. I don't think it'll get there, but who knows? This thing has just absolutely been getting crushed. And but RSI is down at 26, so maybe I should run another option to see if I can lose again. All right, and platinum is down 2.2% for the week, so this one's looking pretty cool. All right, now I've got a bunch of lines in here, and they might look a little confusing. But what I'm looking for is I'm looking for 3 points to touch. And so we got one back here in May of 2024, and then another one here in October 2024, and then this one recently, beginning of February. So there's 4 places as I see it that it needs to break. So one is this immediate one right there. Next is this horizontal line of support. And then we have a smaller one right here that starts back in March of 2022 and hits again. And then we have this really long-term one. When I go to the weekly, you can see it. And this starts back in 2008 at the great financial crisis, right? So like you have these financial crises, it just runs up and hits there and then hits again back in February 2021. And then again recently. I think once we clear that, it could be off to the races. So pretty exciting for platinum. I think we're just in an accumulation stage right now, although I would wait for a pullback here before I bought any platinum. PPLT is the way I would do it and the way I have done it, and also SPPP. I like an order at 82.50 and then another one at 80 bucks. And if you're new to the sector and just want to get in, I think 85 is probably your starter entry position and one that's very likely to hit. And Palladium is down 8.3% for the week. So thought we might have had a breakout here in Palladium. Did not happen. Came right back down, touched right on the 200-day moving average. So we'll see if we get a bounce on that, but kind of middle of the road, technicals right here. So I like Palladium. Kind of where it is now, and then even more around 900 bucks. And PALL, same kind of thing. The $900 level will be around 83 bucks in this stock, or this platinum shares. And then stink bid at $80. And SPPP, yeah, you know me, is down. How much is it down? 1.6%. So I think probably got a little bit of catch up here to play, because we got Palladium was down 8%, right? And then PALL was only down 3.9%. So I don't even know if there's options available on this, but I was just thinking that might be kind of a neat little short dated put option right there. If Palladium's down 8% and this is only down half of that, this is probably going to play catch up. Anyways, SPPP, like a limit order at 9 bucks, and then 875, stink bid at 825. Platinum divided by silver. 1 kilo of silver will get you 1 ounce of platinum, and platinum divided by gold. 1 gold coin will get you 3 platinum coins. Extremely, extremely, extremely cheap. So if you have no platinum and you got a lot of gold miners, might be time to make a little trade. Nickel futures up 3.4% for the week. So it looks like we finally caught a bid right around 15,000. So I'll keep this green line here, and that should keep the world nickel price above 15K. And NIKL, so this one kind of looks like the AMR chart here. It's just terrible at finding bottoms in nickel. Hopefully we're getting a reverse right there. That last bar right there on Monday looked pretty good. So hopefully we catch a bid with that. But I think nickel's pretty cheap. If you have no nickel, I think now's a fine time to do it. Centaurus Metals came into the double bottom just like we'd hoped. Hit right around 21 cents here on the OTC and then bounced up. So, yeah, like Centaurus a lot. And it was flat for the week. Iron ore up 0.6% for the week. Again, kind of trading in the middle range here in between 112 and 92. So just kind of middle of the road here. And BHP up, what was that? 2.4% for the week. So I moved this green line up. I think it was at 47 or 47.50. I moved it up to 48.50. Kind of anywhere in this zone I think is great for BHP. They pay a pretty good dividend. And Rio Tinto up 2.6% for the week. I think 57 might have been a little too cheap. It just never quite got there, so I moved the limit order up to 58.50. And our favorite metals and mining ETF here is PIC. So I updated the what are they called? the holdings percentages. So BHP, so this is an ETF with a bunch of these in it, like BHP 13.2, Rio 7.2, Freeport 5.5, Glencore 4.7, and then after that you got Vale and a bunch of others. And the dividend here is accurate as well. At this price point, assuming the dividends, I mean, you can't assume that they're going to pay the same thing, but it's basically 3%. All right, and tags. This was a new one brought up by Joe. I thought this was worth bringing up. It's down 2.2% for the week. This is basically an agricultural kind of fund. It's got, let me show you here, share screen, click, and there we go, tags. Okay, so these are cane, wheat, corn, and soybeans. So maybe you guys have heard of these. They aren't actually buying sugar cane, and they're not actually buying wheat, and they're not buying corn, and they're not buying soybeans, because those are awful to store. You know, there's not a warehouse full of soybeans in here that are going to rot. So what they're doing is they're buying futures in this, and this is the breakdown of tags. So it basically rebalances and puts each of these in it, you know, trying to keep a quarter of a percent of each one of these, or 25% of each one of these for a quarter of the fund. So I thought it was kind of good. You know, if you think that agriculture could do pretty well, then this is kind of an easy, you know, well-rounded way to play it. You know, but you definitely want to catch it in times where it's going up, because there is a little bit of, you know, they're not doing this for free. And it's in the futures market, you know. It's not like the Sprott Physical Uranium Trust where they're storing the uranium, or the Gold Trust where they're storing the gold, and you know, there's more cost to this one. So anyways, I like a limit order around 24.50. And Nutrien, okay, so that one shot up. We almost had a breakout here, getting above the 400-day moving average, and then it just got rejected and fell back down. Got caught here by the 200 moving average, so it's just kind of hanging around $50. Limit orders of $45 is what I see is good. And that one is up, what is it, 0.4% for the week. And Bitcoin, as of this moment, is down 1.2% for the week. So still pretty high here, although I got to say there does seem to be some support forming right here, right around $92,000. So wouldn't surprise me at all if it comes back down here to 92,000 and bounces back up. You know, we'll see if it happens or not, but I still think it will eventually come back down to this white trend line right here, around 78K. Alrighty, well, I hope you guys got something out of that. Give me a thumbs up for the content, and subscribe if you're not already. I love you guys. Thanks for always being here. Hope to see you over at the Rule Classroom and the Rule Classroom Plus. You can try it out free for 2 months, no cost, and see if you like it. I'd love to see you over there. Alrighty, you have a wonderful rest of the day, and be sure to support the show and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.